Hey YouTube, what's going on? Chris here. I want to bring you all an update of something I was studying today, and this is something I've been really harping on for quite a while now, and it's the importance of trendline breaks, especially in this cryptocurrency space. They're very powerful, guys, to the upside, to the downside, and what we're going to get into today is actually the short term, the intermediate term, and the long term trendline breaks, and how they'll actually vary, how longer term trend lines are going to produce more of a break to the upside or the downside in terms of percentage gains or losses than a short one would. So we're going to get into all this, guys, and what I'm going to be referencing out of today is Chart Patterns. It's by Thomas N. Bulkowski, and this is not out of the Encyclopedia of Chart Patterns. This is just a smaller version that I like to carry around with me so I can really study. It's about 300 pages, but it's great. It just really introduces you into all this stuff. So if you guys like these tutorials, you like these, like, subscribe, hit that notification bell. I appreciate you all being here with me today. I'm going to try to make this a shorter one, but it's still very important. And like I said, my whole purpose in this channel is to educate as many people as I can. I was once a newbie, and I hope you all who are watching these videos really get something out of it. That's my goal. So guys, what we're looking at here is trend line breaks. Okay, now this is going to be a trend line break to the downside. It can also happen to the upside as well. But what you can see here is this blue trend line. And what's happened was we respected it for quite a while here. Now this chart doesn't have dates or anything like that, but you can see we had one touch here, came close to two. There's our second one right there. So we almost had three, but that's two, and then here's three. So this is a valid trend line, and this was a stronger trend line. These were one-day candlesticks right here. So this has been in place now for quite a while. This is a mix between a short-term and an intermediate-term uptrend that we were in. But what happened was, you can see how we pushed up and we started to have like this doji candle here, guys. A lot of indecision, or almost rickshaw man. We were seeing a lot of indecision, a lot of wicks up here. Then what happened was we finally broke down. You can see this candle where we broke down right there. So we were no longer in that uptrend, and we just started to fall. But you can see, guys, basically the importance of these trend line breaks. You can see where this price started all the way down here. Look where we fell. So basically, if you were down in here and you rode this up and you did not sell when we had this trend line break, all your gains are basically gone. And that's the importance of protecting our profit, especially in this space where it's the most volatile space in the world. These trendline breaks can be so helpful to you guys. It just happened on Litecoin recently, and when that trendline broke, that's when I sold out, guys, and I was just waiting patiently. And then, as you saw, Litecoin basically broke from that trendline around $120, $125, somewhere right in that range, went all the way down to $77. And that's the importance of capturing these trendline breaks. Now, with trendline breaks, what I want you to realize is sometimes you can have a break, and then you can bounce back up and retest this trend line right there before you fall farther. That's one option. Another option is just breaking and falling like we did here. And then your third option is a break, and then you actually get back up within this trend line and you start working that trend line again. But this was just a clean break out of that trend line. So what I like to look for is a daily candle close if I'm on the 1 day below that trend line to be able to sell and get out of there. Other people, they'll like to look at the 4-hour chart, and they'll look for 2 candle closes either above or below, depending on if you're looking for an upside break or a downside break. So this point here, we'd say downside break. So if we were on the 4-hour chart, we want 2 candle closes below this trend line, and then that would basically tell you, hey, it's time to get out of here and protect my money. Now remember, this is the same to the upside. So if you have a down sloping trend line and you start to have a breakout to the upside, that's another thing, guys. It can run just as hard to the upside as it can to the downside, and that's something you really want to pay attention to. So now I'm going to read you out of my book here about trend line length and the importance of it. Of all trendline features, length is one of the most important ones. Do long trend lines perform better than short ones after a breakout? The answer is yes. I found that the median length for downward sloping trend lines that I used was 139 days. Trend lines shorter than the median saw price climb an average of 33% after a breakout. So that's just from short-term trend lines, guys. You're looking at a potential 33% breakout after the breakout, but long trend lines soared anywhere from 43 to 50%. You can save yourself or gain if you're able to capitalize on these trend line breaks. As a check, I used another method and sorted the trend line lengths into 3 categories: short term 0 to 3 months, intermediate term 3 to 6 months, and longer term 6 months or more. Short-term trend lines had post-breakout rises of 34% intermediate, and long-term trend lines had gains averaging 35 and 46% respectively. I found similar results for upsloping trend lines. Trend lines are like diving boards. You get a better bounce from a longer diving board than you would a shorter one. So whenever a longer trend line breaks, that makes it even that much more important, guys, because you could be looking at a 50% gain to the upside or a 50% loss to the downside. And just remember, these trend line breaks, why it's so important is the trend here was up. And then once you have that close below it, the trend is no longer up and you're starting to look at a different trend. Professional traders, they're paid big money to find trends and identify trends and when they're changing from, positive to negative or vice versa. And that's what we want to try to identify as soon as we can. And remember, in an uptrend, you're going to have higher highs and higher lows. And in a downtrend, you're going to have lower highs and lower lows. So this is just touching on trend line breaks here, guys. I'm going to continue to do a lot more into it. We can get into things like the white space in between, how many touches there are. There's just so many things to cover here, as well as support and resistance, those types of things. When support and resistance breaks, very similar to like the trend line breaks. But I wanted to put this one on your radar. If you guys like these, like, subscribe, hit that notification bell. We're trying for 100 likes on this video. Appreciate y'all being here. Continue to learn. Let me know down below if you've learned something from these trend line breaks or if you've studied this before. I really want to hear your guys' opinion. So God bless and take care, my friends.